Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having some fun going over charts and unusual whales data for you guys. I'm going to try to do this once a week on Sundays, going over the options data that we see from Friday, just to get an idea of where things closed relative to max pain and if they could be going higher. I'm just going to be going through a list of tickers. More or less, you can see them here. Most of them I hold, but not all of them I do. Also, the options data over here, you can see the tickers listed here. And I know that Ed's in the way, so I'm going to have him step out of the way. And you can see that full list here. So I'm just going to go contract by contract, looking up what stands out, and then go over why that stands out to me. Maybe something's going to be moving in the next week or so. And I will also follow up on AMC, RZLV, and NEO from last week. But I have to say, part of the reason why I'm not doing like daily videos is partly because I've been gaming, having fun doing that, was streaming gameplay, taking requests during that, but not enough people were showing up. So if you do see me streaming and it's gameplay, stop by, put something in the chat, a ticker you want me to go over, and I'll take a break. I'll go over the analysis for you. If you give a super chat, I will turn that clip or that analysis into a clip as a video, also diving into the unusual whales data, which is a service that I pay for. So you could just do like $1 super chat, and that will justify it to me to go over the data for you and then turn that into a clip for everybody else. But yeah, I mean, I've just found that, whether it's RZLV, whether it's with NEO, I've noticed things that look like gamma squeezes and they maybe last a week longer. People want them to go higher and they don't end up doing that. And that's, effectively what we saw with RZLV. We did have, a lot of momentum here, but it's pulled back, and it's actually pulled back lower than the level I was interested in buying at. But that's after the move. It's kind of, pulling back. And, I think it's probably going to be fading for, a month or so. As these things do tend to go in cycles. They lure us in on the hype, whether that's, the algo taking advantage of us in the market or on YouTube. When something is exciting, it gets pushed on us. When something is topping or being boring, like over here, nobody wants to talk about it. And, that's actually the best time to be in it. So yeah, I'm just going to follow up on the data here. Hopefully this is helpful for you guys. I will try to include all of the tickers as in the description of the video so you can see them and the order that I go over them. And then I will also try to mention the ones in the thumbnail or the title that I actually do a deep dive into. But let's just do it all based on the data over here. So first I'm going to start with AMC. Is there anything that really stands out for me from this this chart here? I'm going to refresh the page to see if there's something going on here with that. So let's just do the past 7 days for both of these charts. Net premium values reset daily. Okay, and so what we can see is that on Friday, net call premium was up by $900, and net put premium was up by $168,000. So this is not saying anything crazy to me as far as AMC's going. This is, nothing's going on. It's not exciting. But Ed still wants to watch with us, so I'm going to invite him back. But yeah, nothing here. This is a $2 strike call for March. Doesn't really stand out. If we go over the $2 strike call for June, again, nothing really too exciting the past 7 days. $5 strike for January of 2027. Maybe there was something over here. This looks like it was on the 15th, so that would have been on Thursday a couple weeks ago. And yeah, so that kind of stands out. If we expand this to, let's see, let's just do all 90 days. And it seems like a lot of noise. So yeah, I mean, as far as AMC goes, I'm not really seeing too much that's suggesting that it is going to be rallying. But if we do go over the past 30 days, $2 strike call expiring in June. Did see this big candle on January 12th. I went over that before. And then the $2 strike call that expires in March. We did see, this big candle over here on January 9th. So those contracts do look like there's something interesting going on, but now we might be in kind of the boring phase of the market where this just kind of bores us. And so what we can see over here is that AMC had attempted to get above the 20-day simple moving average, had a number of wicks above it, but really couldn't hold, had a couple closes above it, but again, couldn't hold. And then on Friday, January 23rd, we did get a pretty bearish looking red candle there, coming down about 5.5% on the day and closing the week below that 20-day simple moving average. So yeah, not looking so great there. And then I am going to try to pull up the max pains and whatnot over here so you guys can see them. So for AMC, looks like it's $1.50 for the foreseeable future, and it was $1.50 on the 23rd. We did close, 6 cents above at 156, but still, it's not like an exceptional amount above max pain. So I think that, momentum is kind of, lost for the time being. We have to, kind of find a floor. And if I just do a Fibonacci retracement here, what can we see? The 786 is around 151, 150, somewhere around there. So, and with max pain around 150, I would look for retests of that level. And really, I would say it's probably not, an appealing buy unless it's below 150 at this point. But if it starts to put in new lows, which I believe the all-time low is hit on January 8th, and that was 144, it could just continue to bleed. So good to be cautious with that one. But yeah, let's continue on down the list to ASST. This is Strive. This is a Bitcoin, I believe, treasury company. I believe that's correct. Mike Alfred is big into them. I believe he's mentioned a reverse split, so this could be something to be very cautious of. And let's see, just going over this kind of briefly, 7 days for both of these charts. Again, not really seeing too much with the net call or put premium. On, let's see, the 16th, that would have been a couple Fridays ago, we did have a net call premium up by $1.1 million. So that seems pretty good. It's really just kind of consolidated down, though. The stock price is in yellow here. Net call premium going up a little bit, but 370,000 on the 21st and about 300,000 on the 23rd, up by 297,000 net call premium. But we also saw this drop over here. So yeah, but we have seen, it looks like for the $1.50 strike expiring in March, we have seen increases in the premium. So it does suggest buyers have been, accumulating this. But also I should check that with AMC. Has had some, let's see, green and red kind of mix there. Whereas with Strive, we see that, it's a lot of buy-in, and it did look pretty good over here on January 15th. We saw from the 14th, 39,000 contracts traded, which led to an increase in nearly 22,000 contracts, going from 211 to 233,000, now around 235,000. So yeah, that does look good for the $1.50 strike call expiring in March. If we look at the $1.50 call expiring in June, have seen some spikes, have seen generally increases in this contract, buying up of this contract. So that does seem good on the 20th. So that would have been, I believe, Tuesday. Nope, that would have been, Tuesday, because of Martin Luther King Day was on the 19th, I guess. 19,000 volume traded on the 20th, which led to an increase in open interest of 12.6 thousand contracts. Starting from the 15th or, the 20th, whichever, that open interest was around 162 to 164,000. Now it's around 182.7 thousand. So this is looking pretty good. And I looked at this other one, and then here's another one. This is again a $1.50 strike call for October. This one's been a little more mixed. It's just going to be a little bit more, less volatile, because it's further outdated than the other ones. It expires later. But we could see this kind of nice spike here on Friday the 23rd. The candle premium was only 56,000. So again, nothing that exceptional. And just to pull it up on the chart, this is one that I do have a very small position in, just 200 shares. And every week, basically, I'm going to be selling a covered call on a weekly basis with a strike of $1. My average is below $1. One of the benefits of starting very small is it's easy to get the average down. Yeah, I mean, my average, let's see, I'm not sure exactly what my average is at, but I'm not sure what tool I had there. Something got a little bit wonky with that. But I did have my eye on 87 cents, and Strive did close at around 87.05 cents. And so that was the level I was looking to buy at. A couple weeks, past few weeks, I've had a limit buy order, and it did get filled. I don't plan on buying any more. If it does go up to $1 and maybe my covered call closes in the money, that would be fine. Take some risk off the table, and then if it does go lower, I can buy back those 100 shares. And if we do look at a Fibonacci retracement here, we have the 786 around 81 cents. So that's a possibility. One thing that I was looking at is if I do remove the drawings just to remove some clutter, we do have a close. Let's see, over here on December 30th, that was at 73.2 cents. The low over here was 70. Okay, so that gap was filled, but over here on the 31st, the close was at 73.8 cents. And there's a gap there. It has not yet been filled. So I'd say like 74 cents is like the new 87 cents for me. If it goes up to $1, I'd be happy to trim out there, lower my risk. And then if it comes back down, I would be looking to add back that 100 shares around 74. If I do trim out, then maybe at 75 cents. But I do think that this could be going lower. But yeah, those are the contracts here that I wanted to go over, and we can just pull it up here to look at the max pain. Looks like it was $1. We closed below $1, and it is $1 for the foreseeable future. So yeah, it is what it is for that one. Another one that is, a Mike Alfred stock. He's actually, I believe, on the chair of this company, backed, ticker symbol BKKT. $20 strike call that expires in February, about 25 days between now and expiration. This one, stock price in yellow has been coming down. I don't really see anything that stands out too much with the options data, and this has not really been too exciting with the changes in open interest. We could also look at the $50 strike call that expires in March. It looks like on the 16th, so a couple Fridays ago, we did see a pretty big candle, but that candle premium was only $184. So that doesn't really stand out too much. So yeah, this contract, in all honesty, kind of seems like a dud. And yeah, so I'm actually going to remove that from my list here because that's not one that I think is worthwhile. I mean, the open interest is 1,200 contracts. That's only 1,200 at most others that might be, buying, or selling these contracts. So it could be a dud. So I'm going to delete that one. This other one, 4,000. Again, this might be a dud as well. I'm not going to go over the chart because I'm just going to spend too much time. Bitmine Immersion, this is ticker symbol BMNR, an Ethereum treasury company led by Mr. Tom Lee. And what we can see, this is the $65 strike call that expires in June. Again, lots of noise in the net call and put premium. We've seen some increases, but also some decreases in the open interest for that $65 strike call that expires in June. And yeah, it's currently around like 28, 29. So this one seems like it's probably going to be a dud, but I don't have another contract here, so I am just going to keep it up there to keep an eye on it. And yeah, if we do go over this, I guess I should go over the charts. Just coming back to backed, does look like it might be getting held up by that 50-day simple moving average. It's the blue line. That's around 1468. So maybe the bottom's in for that, but maybe it could go lower. I don't know. Bitmine. Let's see. I mean, is it putting in higher lows? What was the low here on December 31st? That was at 2684. Over here, 26.76. This is a lower low, but it does seem like it's getting bought up. We do have that trend line there that I've previously drawn, apparently. But yeah, I mean, I think that this is a nice way to get leverage on Ethereum. If you're bullish on Ethereum long term, Bitmine could be, seeing a move up to here, like 160. What was the high here? 161. Yeah, so that's a great move from around 30 to up to 160, but maybe that doesn't happen, or maybe it takes a while to happen. Who knows? The next one on the list, this is again going to be another Mike Alfred stock, and I believe that he's also in Bitmine, so consider that. Maybe he's a little bit polarizing, a big character. Maybe you like it, maybe you don't. I don't know. I think he's entertaining, and I think that he teaches good lessons on conviction. Sorry, I needed that. I can feel my lips dry. But yeah, let's continue on to CIFR, ticker symbol CIFR. And yep, lots of noise in the net call and put premium. This is a $25 strike call that expires in March. Ups and downs. We can see that there was a pretty big orders filled on the 14th. And that was 3.4 thousand contracts, led to an increase by 1.7 thousand. And yeah, now above 16,000 open interest. So, maybe that's of interest. I don't know. And then also the $20 strike call. This is expiring in January of 2028. So like 2 years between now and expiration. $20 strike call. Nothing too exciting here. If we do go over to the chart, let's see. I mean, this looks like it could be getting held up, by these moving averages. You got the 50-day, the 20-day, and the 100-day simple moving averages ranging from about, let's see, 1691 down to 1621. So really from like 17 to 16 could be finding some support there, but it could also be fading lower. So just because these levels have acted as support in the past doesn't mean that they will in the future. And I think I skipped over backed. Sorry, I'm a little disorganized with this. I just, want to have quality information here, and it takes time to do that, and the channel is too small for it to really feel worth it. Backed max pain was 1450, and it had closed, or was in the after hours, a little bit above that. But then max pain for this upcoming Friday is 18, and then down to 16, 17. So, yep, a little bit of... maybe you can even see it right here. It looks like it's starting to get a little bit weak. Stock price in gray, pulling back below max pain. And then BMNR was another one. Max pain on Friday the 23rd was $29. And that's basically where it's at. So yeah, I mean, I think that this could be coming a little bit lower and then catching up to CIFR. Let's see. Max pain was $18 and basically below that. And yeah, I mean, it could be hanging out around 1750, maybe coming down to 1650 or 16 in the next, month or so. So that is what I would look for with CIFR. Clean Spark, I think that this video, I'm just going to interject this here, might end up getting too long, so I'm going to try to go through these a little quicker. Really just seems like a good amount of noise. Nothing really standing out too much with the stock price or with the net call or put premium. Stock price is in yellow here, so kind of flat, going up a little bit. So, I mean, maybe there's something there. Let's see where I have it. Up here, this was requested recently. Looks like it, is getting rejected by the purple line there. That's the 100-day simple moving average, around $14. And, maybe that corresponds with max pain, CLSK. 1250. So it's above max pain, but max pain's coming back to 1150 in the weeks ahead. So maybe that suggests, yeah, it's going to be getting rejected, pulling back down to here. The red line is the 200-day simple moving average. Broke below it here, attempted to get above the other moving averages, broke below them all again here, attempted to get above all of them, but that purple line, the 100-day, still above us. So maybe we break down one last time, hold maybe 1150 as support, and then maybe we reclaim all of those moving averages, but also maybe not. I have no idea. Next one on the list is GameStop. This one actually seems pretty interesting. This one might be a ticker to go on the thumbnail. So let's see over here. Also, we saw the announcement of like Ryan Cohen buying shares. I believe others buying shares. That's bullish. Now, what we see on Thursday, January 22nd, net call premium went up by $5.9 million. So this is standing out. This stands out to me as being interesting. If we go back the past 30 days, yeah, I mean, we have this upside move here. This is the stock price in yellow, not backed by options. Then it's kind of flat, boring, pulls back, whatnot. And then we see stock price in yellow going up. And that seems like it's backed by call premium. So that does seem like there's a signal there. That does seem good. If we do go back past 30 days here for this contract, maybe we'll just look at 30 days for GameStop. This is actually the only contract I have pulled up here, which is the $32 strike call for January of 2028, expiring in a couple years. And yeah, the past 30 days, it looks like we've seen some bigger orders coming in, open interest around 10.8 thousand. But it's actually, not really too much craziness going on with this contract. So there might be some other ones. Maybe this is one worth me doing a deep dive. If you want to join a gameplay stream, I'd be happy to dive into it more, or maybe it seems exciting enough. Maybe I'll do a video on it. But yeah, I mean, this seems pretty interesting here on Thursday. But let's check over on the chart, see what happened with it. Seems like it could be topping here. Let's see. It seems like a little bit of a hammer candle or hanging man candle, so maybe it could pull back. Maybe fill this gap, but not this one, and maybe find that 50-day simple moving average as support. That is currently at 2155, 2150. Maybe that acts as support. Breakout, retest, continuation higher. So this could be looking really, really good. We do see, let's see, is that, yep, I believe that's a higher low, but barely. The low on December 31st was 1999. Over here, November 20th, it was 1993. So, and then 1994 on November 21st. So yeah, slightly higher low. And again, a higher low here. And we see this kind of like trend line here. Maybe I've drawn it. Nope, I haven't drawn it. Hey, look. But we are getting near to testing Roaring Kitties. June 13th of 2024, last YOLO update. That is at 2341. We did pierce it on Thursday the 22nd. And that would have been, let's see, a high of 2350. So yeah, I mean, this is looking good. I'm excited about the GameStop chart and data. If we do come over here to look at the max pain, 21 bucks, closed above it, $22.99. So that's looking good. And it's $21 for the next couple weeks, then goes up to 22. So and look at this. Look at the max pain, the historical data here. The gray is the stock price. We see it, break out a little bit above max pain. It seems like we're breaking out above it now, so maybe this could be getting into like gamma ramp territory the next couple weeks, but it's not going to last forever. So do have a plan if GameStop is moving. Not fun to trim when things go up, but good to manage risk when things do, so then one can buy back if things go lower. Next on the list, I'm going to do Mara. Again, not really seeing anything stand out too much with a net call or put premium. This is one that, I do hold, I hold most of these, like 10 bucks. I think it's a good dip buy level. I also have a 980 just for one more share. But yeah, I mean, when things are low, good to just very boring, accumulate more if it's something you got long-term conviction in. And if not, that's totally fine. You do you. I'm doing me. And then let's see this other contract here for Mara. Again, a lot of noise. Let's just pull up the max pain data. Oops, not Mama. I want Mara. 1050. And so that was max pain for the 23rd, and Mara closed at 1050, right at max pain. So yeah, I mean, I think that it doesn't look like it's breaking out. It seems like it's going to pull back a little bit more before there's potential breakout. So good to keep that in mind. Then Neo, this is another one that, people get excited about. Lots of squiggles over here, lots of noise. We do see some notable increases in open interest for the $7 strike call that expires in May. about 3 months expiration between now and expiration. And we did see 3.8 thousand contracts traded on the 22nd, which led to an increase in 2.9 thousand contracts that are open, now at around, 58,000 contracts. So yeah, and we did see that was a candle premium of only 73.7 thousand contracts on that day, the 22nd for this contract. Yeah, I mean, it's not looking so bad. It just there's not enough of a signal in my view. It's kind of boring, you know. We're waiting for that signal. And let's look at this other one, $5 strike call for June. Have seen some pretty consistent, you know, green days, open interest increasing. You know, it started on the 15th at 65.5 thousand. Now it's at 70, almost 73,000. So yeah, that's been increasing. So that looks good. $5 strike call for June. I don't have any contracts with NEO, but this one seems like it could be interesting. And a $5 strike with it closing on Friday. Let's just pull it up over here. Closed at like 464. It's out of the money for that contract, but it's not so out of the money. But I should note, since I did have the drawings up here, Fibonacci retracement that I've drawn, I've talked about this level before, $4.39 or 440, 420. Have fun with the numbers, maybe $4. You know, I think that it could be going lower. I think that people tend to get really excited with this one and buy the top up here, and then they tend to kind of bash people who are saying, hey, maybe things aren't looking so great. And yeah, now it's looking better for buying than it was up here, in my opinion. But you do you. Yeah, I mean, 440, I think that could be getting pierced. So I'm chilling. I do have a small share position. And maybe these $5 strike calls for June, you know, are looking a little bit interesting, but I'd like to see $4.40 hit first. We do have the $7 strike call for June. Seen some red, but generally some increasing more recently in open interest. We also have the $8 strike call, also expiring in June. This one has been, you know, more steady increases, but these are getting more risky because they're further out of the money. And I should note the premium for this one's around 20 cents, whereas the $5 one is around 60 to 70 cents. So yeah, that's something to consider. And then if we look at this last one here, $10 strike call for June. This stuff seems like it's a gamble to me, you know, at this point. So I don't know that. Is NEO going to double between now and June? Probably not, but maybe it could have some violent moves to the upside. And maybe there would be some nice opportunities to take advantage of. But options are risky. And we can see here that max pain on Friday was 450. NEO did close slightly above it, but it doesn't really look like it's breaking out here. The gray stock price is not really above the max pain, so needs to pick up some momentum. Right now, I think it's probably let's wait for 440. Around then I think we can start to get really excited about the opportunities that awaits when everybody is bearish, when they have all lost their conviction. That is the time to buy, not up here, but over here, getting near that time. And I'm just going to scroll that up so Ed's not at risk of blocking it. Next one is going to be Open Door, ticker symbol open. Stock price in yellow has been coming down. It looks like it did close on Friday right around $6. To me, $6 is like, you know, a good level to be adding or lower. And we do have this parallel channel. We've been trading around the top of it here. And, you know, that parallel channel could intersect with this red line, the 200-day simple moving average, which is currently around 437. Since stock price is above that moving average, maybe over in time, maybe like 450, maybe 460. Let's see, $5. I think that could be, you know, a reasonable level to find some support for this to bottom and then continue higher. But yeah, nothing really too much standing out to me in the options data here. This is a $10 strike call that expires in February with a stock price around $6. This one's very risky. I don't trust it. And I don't have any contracts other than, you know, an AMC contract that expires next year. So you do you. I'm doing me. Open Door $9 strike call that expires in May. This one, you know, seems like it's a little bit more interesting than the $10 one. It's got some red and green. The $9 strike call expires in May, so a little bit more time. Only green, but it's not a huge amount of open interest. And we do also have the $15 strike call also expiring in May, red and green. Take that as you will. Let's just come over here to look at the, let's see, the max pain. So 650 over here, close below it. And so, yeah, I mean, I think now is kind of the time where this is going to lose some steam, maybe over the next month. And when everybody's really excited about Open Door over here, this is like when I first started covering it. When it's up here, that's great. That's exciting, but that's actually the time to trim. When it's pulling back, when it's boring, that's, when it's time to add slowly, casually, however you want to do it, or, set levels to buy dips. Like I said, I think $5 could be a level that's hit. That'd be great to have an average around there, finding these levels as prior support, maybe $4, even price could be coming down to there. So just good to be thinking about that. But yeah, the next one on the list, Plug Power. This is not one that I hold. I think it's a little kind of risky, just being a hydrogen fuel cell. I think it's a little more speculative than some other sources of energy. But yeah, this is the $4.50 call that expires in June. Little bits of buys. We did see something interesting on, let's see, on Thursday, the 22nd, we saw net call premium up by $917,000. So this is another one that I would be interested to dive deeper into that to find out more about it. So if I'm streaming for gameplay, make sure you tune in and request that I dive deeper into Plug. And yeah, I'll try to do that. But yeah, this does seem, interesting. What is the contract there? It does not seem like it was the $4.50 June strike. Maybe it's the $5 strike. Nope. But yeah, those are two contracts that I do have up here. Don't hold them. And if we do look over at Plug, I should have it somewhere up here. I don't hold it, but I do go over it periodically. And yeah, I mean, this looks like it's had a really nice move above that purple line, which is the 100-day simple moving average. But it looks like we got rejected. It looks like we're going to be testing that level again, which is at like 240. But we also have the 20 and 50-day moving averages right around 225 to 220. So I could see those levels as acting as support. If we break below them, maybe we come down to retest the 200-day simple moving average, which is sub $2 at 183. So good to keep that in mind. But we don't have bearish divergence. We do have higher highs here. We also have higher highs in the RSI. But maybe we just don't have enough volume to support the breakout move that we're potentially seeing. But yeah, I'll just pull this up over here for max pain. $2, then to 250. So we are above max pain, but I just don't think that there's enough volume backing it up. I think it might be pulling back for another couple weeks, maybe a month. Who knows? I have no idea. Then RIVN, this is one that I'm excited about. Just being below 16, I wanted to start building a small position below 20. And with the expectation that it could come down to 16, maybe it comes down to 15. But we do have a $25 strike call that expires in June. Some buys and sells, but nothing like too crazy with this one. Net call and put premium, we do see some net call premium dropping here on January 14th. Dropping by, let's see, $4.7 million with net put premium coming down, going up by $1.3 million. I believe I kind of mentioned that. I just think that, with RIVN around 16, sub 16, I think this is the, good time to accumulate. Don't have to be, loading the boat all at once. In my view, that's not what I'm doing. Just very casual, probably like a weekly dollar cost averaging, nothing too aggressive. But yeah, I think that there's a lot to like about the stock, about the company, about Amazon's part ownership, the partnership there. I think that, RIVN seems really good. We also do have this other one, $25 straight call that expires in January of 2027. Ups and downs over here. Open interest has actually gone down since the 15th at 28.5 thousand, now at about 23.4 thousand. So, yeah, I mean, I I think that what we're seeing now, this is the time when it's good to be accumulating, when people are panic selling, when things are dropping, very casually accumulate. That's what I'm doing. Below 16, I'm happy to. And but yeah, again, not that aggressive, not a big deal. So just coming up to here to RIVN. Looks like maybe it's finding support around that 100-day simple moving average around 16 or 1592, but we do have the 200-day just below us. That's at like 1463. So again, if this came down to 15, I think that would be awesome. So, I mean, to be honest, that's my next buy order that I have placed is at 15. But if that doesn't get filled over the next week, maybe I, add a little bit more, sub 16, but above 15. And then if we do look over at the max pain, let's see, it was 1650. We closed below it at 1595. So yeah, I think that RIVN's lost some steam. I think it's lost some momentum. When it's not super exciting, that's the time to be accumulating, in my opinion. And when things are exciting, like RZLV has been exciting, that's the time to be trimming. That's the time to be taking some risk off the table because it might lose momentum and timing is never going to be exactly right. And so this was pointed out to me as being an exciting play. It really did take off. The data supported that, but you never know how long that data is going to play out. And it didn't last as long as we would have liked. But it did go up a lot. So we are seeing, stock price go up here. Sorry, that's the premium price. Stock price go up in yellow over here and then pull back some. And yeah, I guess I'll go over the chart in a second. But this is the $4 strike call that expires in May. Saw some increases in open interest, but it hasn't really done too much the past week or so. And we did see over here net call premium was up by 1.2 million. But then following the 15th, that was Thursday from a couple weeks ago, net call and put premiums more or less been flat. If we do look at the $3 strike call that expires in January, this one, again, not too crazy going on there. And I do have it over here. This is one I did not end up picking up any shares. I was looking at, when it was moving up here, when there was this little bit of a pullback, I expected a little bit of a pullback to kind of fake us out before Friday close on the 16th. And it pulled back to a low of 345. I had a buy order for just 10 shares, having a little bit of fun with it at 333. Repetition in numbers, got to have fun. Otherwise it's just boring numbers. Didn't get filled. And the reason for that, not just having fun with numbers, but because I kind of had this level identified, over here, kind of got like a double top here with the open on November 20th and a pierce of it on the 24th of November. Also over here, and then kind of consolidating below it here before breaking above. That's at like 324. And so I just had 333 with the expectation 324 is probably not going to get hit on this pullback. And it didn't, but I was a little too conservative. I wasn't aggressive enough to get a fill on the upside, but I'm fine with it. And I removed that buy order because it's like, well, I didn't get it on this dip. It's probably going to go up more. And then when it does pull back, it's going to bleed some more. It's going to take its time. Everybody that was FOMOing in up here, it's going to take its time bleeding, boring people out of the position. That's how, the stock market makes money, by squeezing the money out of retail, by getting them in on hype and getting them out on boredom. And what we can do is a little Fibonacci retracement, see where might this be. Let's see, pulling back to. And let's see, $3. I think this could be coming back to 3. I think this could be coming back to like 261. 260, that's the 786. The 618 is $3. And yeah, but also, is this one that I need to be in? No. Is this one that, I'm in love with or that I know a lot about? No, I don't really know too much about this company. It's just, the data seem to really support the move. But now it's, when weak hands get shaken out over the next month or so, and then we see the next leg up once everybody who didn't have conviction, who didn't hold, is out, then things get exciting again. And yeah, let's just pull it up over here. So that's RZLV. It's a tongue twister for me. But the max pain for the 23rd was $4. We closed below it at 314 pi. Maybe that's good luck to you. I don't know. Let's see, 350 and then 250 for the monthlies in February. So I think that this most definitely could be coming down to 260, like to the, was that the 786 that I had drawn over here? What did I have over here? Yeah, 260, 786. I think that could happen. So I'm just going to leave that up there. And then let's see, what's the next one on the list? Snapchat. And I am actually going to have Ed step out of the way for the rest of these because I think that he's going to be blocking some of them. And so, yeah, Snapchat, I do have a $13 strike call here that expires in June. Ups and downs here in premium, ups and downs, lots of noise in premium, but we do see net call premium going up here by 654,000 on the 21st. And that's really most exceptional. On the 14th, we saw it go up by like 710. But we've seen lots of wiggles, so I think that there's not too much signal here. I think below 8, I feel like this is a good deal, but maybe I'm wrong about that. I do have a small position in Snap, don't have any contracts. Let's see, $10 strike call. I've seen some more consistent buying, but did see some selling more recently. But yeah, I mean, this is like hundreds of thousands and not like millions or anything. Let's see, a $12 strike call for January. And the other one that I was talking about was a $10 for January. Yep, ups and downs. $25 strike call again for January. Yeah, so I mean, I'm not seeing anything that really stands out a ton. Over here on the 14th, that was $408,000 candle premium for that day, or not for the day, for this 30-minute candle window there. We do pull up, let's see, Snapchat over here. This is one that I do hold. And yeah, I mean, I think that it's like attempting to get up to these moving averages, but getting rejected. And so maybe we're going to be revisiting this trend line, maybe revisiting the lows over here around 712, which was the lows from December 16th. Yeah, 712. So do keep that in mind. And then Snapchat over here, 750 was max pain. We closed just above it at 762, but I think we're kind of losing that steam. Max pain for this upcoming Friday is $8. So yeah, I think that the stock might be going down a little bit. Although earnings coming up on February 4th, maybe, the groundhog does not see its shadow. And maybe a day or a couple days after that Snapchat, the little ghost doesn't see its shadow and the stock price goes higher. I have no idea. And then let's see, Unity Software. This is one, I've been waiting for it to hit 40. Hit 40 a couple days ago, maybe over here. I'm not sure. I added another share to my position, in a small position, but having some fun. Get a little emotional with some stocks. I made a lot of money with calls on Unity in the past, so I don't want to be too, too excited about it. But yeah, lots of squiggles over here. Nothing really standing out too much. Ups and downs over here for the $55 strike call that expires in February, with price around 40, 42. I think this is probably going to be a dud. We also do have the $40 strike call that expires in March. Seen a little bit more buys, but, really just the open interest doubled. So that's, more than doubled. So, yeah, I mean, it doesn't seem like it's a huge position. Then let's see, $40 strike call for April. Some buys, nothing crazy. And then 65 for December 2027. Nothing much here, nothing too crazy. And if we do go over the Unity chart, let's see. Yeah, I mean, I think that, 40, that's a dip buy. On January 20th, hit a low of 39.71. But this could be pulling back lower. That's effectively testing the 618, the yellow line there. The orange line is the 786, and that is right around 37.29. So maybe 38, maybe not quite 37, could be acting, as a bottom, but maybe we also sweep the lows over here, and that would be like a full retracement down to around 34, and that would actually be getting below the 200-day simple moving average right over here, the red line, which is at 34.55. So maybe If this does break below 40, like I said, 38, I believe I said 38, and then maybe 35, 34 would be the next levels down. And yeah, 37 to 38 is the 786 there. Let's just pull up Unity over here. And we do have max pain of 1, and we did close above that 42.34, but seems like it's kind of losing steam a little bit like the others, and max pain is higher for the upcoming weeks. Looks like in March, max pain's 31 for March 6th, so maybe we could see some volatile moves to the upside in response to that. And then the last ticker that I'm going to go over here is going to be UAMY, which is, to be honest, I forget the name of the company, which I should probably know. That is, let's see, the United States Antimony Corporation. This is rare earth elements, rare earth mining. And yeah, this is one that I have a small position in. We do see, stock price in yellow going up. And we do see net call premium up on Thursday by $1.3 million. So this is looking pretty exciting. I think this looks good. And yeah, the contract's over here, 1250, that expires in, let's see, actually, February. I also have USAR, so I'll go over that as well. This is the rare earth elements. So this one, seen some selling for this, so maybe it doesn't seem that great, but this generally seems good. And for USAR, it's more or less the same, so I don't need to like dive into that too much. UAMY, let's see. Yeah, I mean, I think that this is potentially getting into the overbought territory, and if it does pull back, I think that UAMY could be finding some support around the moving averages here, which is around 750, somewhere around there, maybe $6.66, which is the 50-day simple moving average. Maybe that's a bad luck omen. So good to consider that. And then USAR, I believe I went over that recently, looking at the chart here. I mean, this looks like, based on where those circles are, this is a 100% Fibonacci extension to the upside at like 2576, and it hit a high on the 23rd on Friday of 2527. So I could see a pullback. I mean, maybe coming down to like 1631, corresponding with, level over here that was, resistance in the past. And yeah, it was support over here. So it could be support again, but maybe this consolidation acts as support again, and maybe the bottom is 18. And then just real quick, let's look up UAMY over here. And the max pain was 850 when UAMY closed at 1085. And then let's go back over to USAR, which, let's see, USAR had a max pain of 1950, and it closed well above at 2477. And so, yeah, I mean, I think that rare earth is looking good. I think that GameStop is looking good. And what was the other one that stood out to me? I think it was Plug Power. So those are probably the ones that I am going to put on the thumbnail, but in the description, I will have all of the tickers. And so, yeah, I mean, I hope this was helpful for you guys. But, as always, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below. And, yeah, make sure you subscribe to the channel for more content like this, probably weekly videos going over a lot of information. And then I will be streaming gameplay, which you can join, put in the chat a ticker you'd like me to go over. And during a break in the gameplay, I'll go over it. I mean, if you do a super chat, I'll release it as a clip and dive into the unusual whales data. But yeah, thank you so much for watching. Hopefully you guys had a great weekend. Hopefully you stayed warm. And, I hope you have a great week ahead. See you later, guys. Bye.